Nigerian bond markets are experiencing significant sell-off as investors raise concerns over governance, despite the fact that we're experiencing high yields. Meanwhile, as the next MPC meeting approaches, experts are advocating for a pause in Nigeria's interest rate hike to strike a balance between curbing inflation and encouraging economic growth. Lastly, the Naira has depreciated by over half its value in Cardoso's first year as CBN Governor, adding to the growing concerns about Nigerians and the economic outlook. These developments are critical as we explore their broader impact on Nigeria's financial landscape. Joining us is Gbenga Magbagbeola, the MD of Sycamore Investment and Asset Management Limited. You're very much welcome to Market Boss.
Thank you very much, and thank you for having me.
It's a pleasure having you. Well, we saw significant sell-offs in Nigerian bonds in the second quarter of 2024. Is this something to be worried about? What do you blame it on?
All right, so generally speaking, the sell-off we're seeing is as a result of loss of investor confidence that we've been experiencing in the capital market and the bond market specifically. The fact that inflation has continued to reign at the high levels that it is, that's increasing the margins or increasing the spread between yields that investors can get. That's talking about a real yield. And so investors generally are seeking for better and more attractive investment yields in other asset classes. To add to that, the fact that the Naira, the Nigerian currency is still under pressure, and the continued devaluing of the Naira is also adding to investor concerns. And so investors generally are also, there's flight from the bond market. Foreign investors are also selling off based on political risk and policy risk with regards to the FX environment. So those are the things that we're seeing put together, contributing to this sell-off in the bond markets.
So, Mr. Gbenga, given the significant decline in the S&P and FMDQ sovereign bond, especially the index, during the second quarter of this year, 2024, what are the primary factors contributing to the volatility in the Nigerian sovereign bond market? And how do you anticipate this trend? How do you think this will impact future investors and their sentiment in the overall health of the Nigerian economy?
Well, as I said before, there's a significant drop in investor confidence, particularly the foreign investors at this point. And so we've seen the fact that foreign bond investors have been, selling off the Nigerian FGN, Euro bonds and also FGN domestic NGM bonds, basically on the fact that the Naira has remained largely unstable. There's a lot of volatility we're seeing with the Nigerian currency. If you recall that at the beginning of August, the Naira to the dollar exchange rate was around 1,500 thereabouts, between 1,500 and 1,550, and we saw a continued decline in that exchange up to 1,600, and currently what we have now is around 1,650, 1,660 to the dollar. That volatility and that continued slide in the currency, is a major concern for foreign investors. And so because of that, that just spells country and currency risk to these sub-segment of investors. And they've been selling off the currency, going by the outlook for the Naira, against the USD. There's no, in sight right now, there's no indication that the currency is going to be stable, except, if there's drastic measures that are brought into the market by the CBN and by the CBN Governor to stabilize things. So this is what we're seeing affecting the sell-off and the bond space right now. Foreign investors are jittery, and they are massively dumping bonds in the Nigerian market. That's impacting bond yields.
Well, now that you've come to the Naira, I guess I'll just take you on that right now. The Cardoso has been in charge of the CBN for over a year now. So tell me, how do you rate his management of the currency, especially saying that by September, I think September 2023, the currency was around 747 Naira 76 kobo. But as of September 22nd, 2023, we're seeing the Naira trading at over 1,500 Naira. What do you say about this, really? I mean, this is an over 51% depreciation.
Absolutely. What's the reality is that the Naira has continued to slide, even though in my opinion, and I guess a lot of other analysts in the market will agree that the CBN Governor and the CBN is actually ticking the right boxes with regards to floating of the exchange rates in the exchange market, and also the monetary policy direction in terms of tightening. We've seen more aggressive OMO bill issuance in the market to manage liquidity. And generally, the posture from the CBN is to tighten and encourage more savings and investment, and also attract foreign investors. These are the right steps to take from a monetary policy perspective. But the unique issue with the currency situation in Nigeria is more structural. And so we're talking about more long-term initiatives that we've also seen part of that being carried out by the federal government in terms of diversifying away from our sole and main foreign currency driver in terms of revenue. So the Naira currently suffers from Nigeria's unique situation where we are heavily reliant on revenues from oil exports and things like that. And our diversification in terms of our revenue portfolio is still a bit weak, and that's something that it won't happen overnight. For example, those are things that long-term policy direction will address, and so it's really structural. And just to recap, that the CBN, in my opinion, is ticking the right boxes. They're doing exactly the right things that they need to do. In the short term, we saw in January where some of those policy decisions were made, and we saw significant gains. And at the point, the Naira was even the best performing in the global market. But again, those are short-term measures in terms of monetary policy. And we expect, or we think that generally the more long-term measures will be needed to address the structural nature of the issue.
Let's shift gears a little bit. Let's tilt towards what is happening regarding the MPC meeting. There are experts talking about the fact that the CBN governor has to be careful, and the MPC, which is the Monetary Policy Committee, they have to be careful regarding further hike in interest rates, knowing fully well that it's currently 26.75%. What's your take about that? And it's a fine line between economic stability and also bringing down inflation. What's your take regarding that?
Yeah, you're right. So the CBN has the task of, stabilizing prices in terms of FX rates. They also have the very important task of also stimulating and ensuring the economic growth. So that's a fine balancing act, as you've mentioned, and that the CBN no doubt has in their sights as they meet between today and tomorrow. My take generally is that, given that the inflation rate data that's coming in the last two readings for July and for August have kind of supported the results that the CBN and the MPC would like to see. The Governor Cardoso has mentioned in the past that he'll be guided by data, and as data comes out, they'll make decisions. So I think that that will be a major influence. The fact that inflation coming from about 33.4% in July to 32.15 for August, I think that's a kind of positive from a data set point of view. There will be the consideration supporting a pause right now. Also, to add to that, the fact that global central banks are also cutting interest rates, particularly the US Federal Reserve has also cut interest rates recently. And we know that the US markets generally influences global markets quite significantly. the CBN, in a bid to remain competitive, will also have that in consideration to rethink their, aggressive tightening strategy.
All right.
And very likely we'll see a pause.
Okay, that's interesting. You're looking forward to a pause. Now, beyond monetary policy tools, really, in 30 seconds, what other fiscal measures do you think can be taken to address inflation? We've heard about certain, plans by the federal government, but these things, they are not necessarily trickling down. What are your thoughts?
Well, again, fiscal policies, no matter how good they are, they require time to actually play out, and they're usually more long-term, as I said before, more long-term in execution, long-term in feedback from those policy executions. I think the federal government is already doing some things very well in terms of food, import, suspension of import duties on some food items, which is great and impacts food inflation positively. Measures like that going forward will actually, improve the situation and temper down the pressure on inflation. And as I said before, there's diversification, of the economy away from just oil revenue into the agri, investment in the agri sector, investment in human resources in those sectors, and entertainment as well, will in the long run, as part of a policy, of a fiscal policy, suite of initiatives, will actually add to and help to tamper down inflation.
Okay.
As we see today.
There's really a lot to talk about, but we just have to end it here.
Absolutely.
Thank you, Gbenga Magbagbeola, Managing Director, Sycamore Investments and Asset Management Limited, for your time and thoughts on market polls.
Thank you for having me.